From there on, I think we can cover some real-time examples, especially looking at the action from today, yesterday, and generally laying out a bit of a plan for the next few sessions as well. Okay, hope that works. Okay, so just to, if you can all see the desktop, right? The chat once, yes, we can. Okay, thank you. Okay, just a second. Okay, fine. So a quick overview of what footprint charts and order flow charts are. I think we have covered that in the past, but I'll just quickly try to give an overview for people who are new to this concept. Okay. So that way, there's a general understanding of what we are going to do and cover essentially. Okay. Uh, okay. So see overall footprint, and if you go footprint charts, if you look back into the history of the internet or anything, this was developed by a guy called Trevor Harnett. It's very not a very old tool. So it developed in the early 90s, and he was basically doing flow to electronic trading. And so, and there, in fact, there are still some videos on YouTube from him as well. Okay. And they're very long ones, but there are those videos from him, and he developed it for a product called Market Delta. Okay. It essentially is trying to identify buyer and seller activity, aggressive buyer and aggressive seller activity within the candles, within the candles, and then use that information to determine and analyze who is dominating, who is not able to dominate, and those sort of things. Okay, essentially, who is more interested in taking the market up, or who is more interested in taking the market down. Okay, now this information is known as order flow charts, footprint charts, cluster charts, imbalance charts, across different platforms, but largely they represent the same set of information. Okay, they typically just represent your information around the bid and the ask data itself. Okay, and then this representation and concept, as I said, is varying across platforms, but they represent the same set of information. Now, this chart indicates volume traded at a price by buyers and sellers. What you see is basically not the trades, not the trades, but actually number of volume or what is the size traded, not the number of trades, but the size traded on the left and the right side by buyers and sellers. Okay, so and now Go Charting is one of those few tools, I think probably one, if not one of the few tools, which has a web-based view of this visualization is available. Till this point, the most common tool was typically the Ninja Trader platform, which is basically a desktop platform. And Ninja Trader is a desktop platform where you still need to purchase plugins and other things to enable this view. Okay, it's not default offering from the platform, but you need to buy the plugin and the data feed. What advantage we get with Go Chatting is you don't need separate plugins, and then it's web-based, so the configurations are easy, the templates are easy to set up and everything. Okay. This is, if you see this, and if you look into again, this is one of the most popular tools that are used by professional traders and proprietary traders. This alongside DOM, because that represents the most real-time information about the market structures, and what market can take as a direction in the next move. In a short term, essentially, that is where most real-time and professional traders tend to use this information. Okay, and there's a lot of buzzword about this. So sometimes, a lot of traders try to use very complicated words around this concept. Okay, where they call it, various names and try to see if it is a hidden indicator or not. And then there are a lot of similar terminologies being used by a lot of people. One of the most common one is, critical delta and all those stuff. But those are mostly trying to fancify these information. The fundamental, see, if you want to really understand, you use this for your trading, fundamentally try to understand what is the intent of the buyers and sellers, and what kind of information can be derived from this information. Okay, from the bid and the ask data. Don't try to use it as an indicator. Don't try to use it as anything else. Try to combine this information with your other market view, other indicators, anything, but don't try to use it as an indicator itself. Okay, so that is the first learning. So don't think of it as a red buy, green sell indicator. It is not that at all. So then, having said that, this information reflects, a logical breakdown of the trading activity within a candle. So candle can be 10 point, 50 point, 60 point range, but it helps you to see a lot of information within the candle of where buyers are concentrated, where sellers are concentrated, where most of the buying and selling volumes are. If there is a imbalance, which is basically a significantly higher buyer or seller at a level present within that candle or not, that way you can really look into the candle and figure out, okay, within that 50-point run in that candle, what actually happened. Okay, was there a stop loss hunting at a certain level? Those sort of informations can be derived. Okay. And as I said, it is nothing like other indicators. Once you know this and once you try to absorb this and you observe this over a period of time, absorb, okay, you will really understand it better and eventually and start to make sense a lot of market moves, a lot of market spikes, which you today may not understand. Okay. It will start making a lot of sense of what market is doing and why it did a certain thing. Why did market turn around from a level, or why did, there was no known support or resistance, those sort of things you will start to infer much more brilliant, better. Okay. So as I said, this provides an inside view of what the market activity is doing. So this is a typical candles, and then within that candle, you have on the left side the sell side market orders. Okay, market orders. Remember this on all market orders, and on the right side you have the buy side market orders. In a general trading activity, what it is happening is all sell side market orders are getting squared off against the limit buy orders, and similarly all buy side market buy orders are, long side market buy orders are, squaring off against the limit sell orders. So what we are trying to determine is, which side is dominating and which side is able to move the markets in an intended direction, okay, or which side is failing to move the markets in intended direction. Yeah, two, three fundamental laws of trying to understand all this. Okay, there's a lot of confusion sometimes that happens. One is, please remember, this is only limit orders, market orders squaring off against limit orders. So market orders always settle against limit orders. Similarly, market buy orders against limit sell orders, okay, which are lying at different levels. One. Two, the belief and the premise of this entire understanding is that market orders is the one that is moving the market. It is not the seller. So if there are two limit sellers sitting at two different prices, even let's say the limit buyer is sitting at 100 and there is a limit seller sitting at 101, and nobody is willing to change their order, okay, or nobody is willing to take the order, market will not move at all. It will be a static market where nothing is happening. You'll see two orders lying at 100 and 101, nothing is happening. Market will only move when third guy comes in and says, hey, I want to buy at 100, one, or I want to sell at 100. Okay, that's the only way. Then, once that transaction happens, it gets recorded as an LTP in the market. Okay, so once you start, you have to believe that information, and once you start believing and understanding that information, then you make sense of why we are only plotting the market orders, and eventually all market orders are against the limit sell orders. So if you sum up the sell and the buy, market orders of a candle, it will indicate the volume of the candle. Okay. So where is order flow charts very useful? It is generally useful, and very prominent across all liquid markets in the world. Okay, any market which is significantly liquid, and the order flow charts are very useful on all those markets. Okay, mostly the futures markets, the commodities, the fixed income markets. Okay, globally, and it's very common in those sort of markets. Okay. And then you have the FX markets also where it is being used. The only challenge with using order flow charts in the FX markets is that FX is like different exchanges, FX, and similarly cryptos also have different exchanges. So there is no common one traded place where a Euro USD transaction or a BTC USD transaction is happening. And generally, there are multiple exchanges where BTC or Euro USD is getting traded, and so you don't have a common order book or a common order book. Unlike if you take a Nifty trade or a Nifty or a bank Nifty or anything, what happens is everything is traded in an NSC exchange, right? There's no other place in the world that it gets traded. So it's only every order eventually goes into an NSC exchange, which is not the case with crypto and FX. So you have to be mindful of that. But generally, if you take the large exchanges, you'll still get to understand and figure a bit what is happening there. Okay, so when you're using it in other markets other than index futures and commodity futures or fixed income futures, please be mindful of that factor. Okay. Couple of information that is captured here, okay, in this entire candle, if you see, is that candle type, whether it's a bullish or you generally with a standard candle, whether it's a bullish or a bearish candle, but here you will also know that Okay, if it's a bullish candle, how much of the volume was on the buy side versus how much of volume was on the sell side. The difference in that volume is basically the delta of the candle, which is not the option delta, but a delta of difference in number of buyers and sellers. So if you see the total volume in this candle was 224 million, of that the delta was 40 million. So there was 40 million more positive buyers than sellers in the market. Okay, you get to know the candle POC, which is basically the most traded volume in the candle. So in this case, the candle volume was in this level, okay, where maximum volume interacted in this level in this candle. Okay. Then you also, if you take a profile of it, I'll show you in the charts, you get a candle profile where you can see the candle histogram easily. And then, of course, you see change in delta from the previous candle versus the current candle. And you also see the cumulative delta, which is basically the day delta that is getting traded throughout the day. So cumulative delta is one of the best indicators to really get started with order flow. If you're new to order flow and something you want to start with order flow, cumulative delta is again one of the most finest indicators to get started with, the entire order flow information. We'll again cover that. Okay. Okay. So now one key information of how you want to structure this information in a footprint chart, okay, in a candlestick chart, is called the concept of nodes. Okay. Nodes is basically putting multiple ticks into one block of information. This is one block, this is another block, this is another block. Okay. So what it does is basically when in the settings, when you go and when you select a particular number of node combinations, basically how many nodes are you clubbing? Okay. Ticks are you clubbing to form one node? It becomes one node. So in this case, our Indian markets, okay, each tick is 0.05. Now, if I put a multiplier of 200, my 0.05 into 200 becomes 10. So each node is a 10-point range in Nifty or a Bank Nifty or whatever you do. Okay. So this is one thing you have to remember. So depending in the larger the size of the instrument, so Bank Nifty is like 40, 45,000, 46, 47,000 today. So Bank Nifty nodes will generally be 10 points or higher. So you have to always keep it 200 or more generally to make sense of it. Nifty would be probably half of it or even lesser. Okay, given the size of Nifty. Similar concepts will apply on stocks also. Okay, how much footprint to use will apply on stocks also. There is an auto indicator available in Go Charting, but I suggest sometimes not to use the auto. The reason is when you do auto, as you zoom in or zoom out, it will compress the information or expand the information. So you don't really develop a feel of what is a good volume, how much volume is interacting as you zoom in and zoom out. So that way you lose context of what is a good volume when you're really understanding an instrument. Okay. As I said, volume is the total of a buy and the sell side, and then the difference of the buy and the sell side is the delta. Okay. Of each candle. So these are the key information that is available. This information is generally also available in something called as the bar statistics in the bottom panel. Okay, so once you look at the bar stats, this information of what is the delta, what is the volume, what is the cumulative delta is available on the bottom panel as well. Okay. As I said, cumulative delta is the sum of delta for the entire range. So every day when it starts, okay, the cumulative delta is 0. Remember, this is the first candle, the cumulative delta is 0. And then the cumulative delta expands, changes per candle. So it will take that cumulative delta till that candle plus and minus the delta of the new candle. Then it is like a rolling sum of, whatever delta is happening at every candle. Okay. I think now what we'll proceed to the chart demo, and we'll of course take some of the questions, okay, and then we'll see how we go from there. Just a second. Okay. I'll just set up a clean chart and get started with. Okay. And then from there on, we'll take on questions and just to do a setup of how do we interpret and do this information. We'll take on the questions after this and you'll be till this point. Okay, this is a clean, simple price chart. Okay, what you have is how do you build and build information on top of it over a period of time. Okay, so you can generally there are two options available: the imbalance charts and the cluster charts. Okay, these are so I generally try to use the cluster charts as my reference. The imbalance chart is basically trying to highlight this information in just a second. in an imbalance in terms of left side buyers, right, left side sellers, right side buyers, and whenever there are n times more sellers versus buyers, it will highlight in a color code in a yellow or something like that. Okay, these are the imbalance charts which are available. Okay, generally what kind of imbalance figures we use? A ratio of 300 to 500 is what I prefer. Okay, so if it's three, basically what it means is 3x to 5x. The lower the ratio, you will have more imbalances. The higher the ratio, you will have, if you use 100, basically that is no, there's nothing. So generally try to use 300 or 400 or 500 as a good number. Okay, now you can auto plot support resistances based on this. As you see, if I have a consecutive three imbalances, I'll have auto plotting the support and resistances. Do be mindful, okay, everything changes once you change the node size. So if I go here and I change the node size to something else, and this entire information will change. So if I change the node size, I'll have a lot of different imbalances at a certain level. Okay, so be mindful of what you're using and don't, and get comfortable with what kind of node size you're using. Generally, if your screen is smaller, use a higher node size. If your screen is larger, use a larger node size. Okay. What I try to do is, okay, as a form of analysis, what I try to really do is take this entire information in the cluster and this information together and put it with respect to volume profiles and other information, and to see where markets are, how they are structured and all this. Okay, so we'll just cover a quick example of this. Okay, so this is the volume profile information, and then on the right side, I'll put a cluster charts just for our understanding. Okay, of what is happening in the market. I'm just using the cluster charts here. Okay, okay. Imbalance calculation should be 300. And you can use some volume settings there. Okay, Nilesh. So you can use some volume settings that is there, but generally, yeah. And there, I think there is volume settings available. Okay, you can use that. Okay. Now, so generally, what we try to do, okay, if you remember, guys, okay, last time. What we did is we spoke about volume, market being in balance and out of balance. Okay. Screen is too small and blurry. Is it? Is it okay? Okay. Okay, guys. So what we are trying to do here is, okay, I'm just trying to put together a picture based on volume profile. How do you get the one? So this is a cumulative profile of all the chart data that you have. Okay, so essentially, the more I zoom in, the more data gets added on the cumulative profile. While this is the session profile, which is basically based per session. Okay, so what you want to do is at every session, you really want to see where the volumes are concentrated in, build a plan based on the volume profile, and then start observing the cluster charts. Okay, start observing the cluster charts cluster charts or the imbalance charts based on this. Okay. So now, if you see what was the action today versus the action, yesterday, let's say. Okay. Yesterday, markets, first of all, yesterday, I think what happened is, if you see this, okay, what was the profile day before yesterday? We'll quickly try to map it and try to make sense of the action that has happened, and then see where we are versus where we can be, and if there were clues in the order flow chart that could have been picked up. Okay, that way you start spotting order flow patterns and other things, and to see whether those patterns could be picked up or not. Okay. So what was the profile information available to you day before yesterday? This was this and this. So that essentially means there were two large volume areas, which was this and this. And then there was, if you see this low volume node here, which was plotted on this day. So essentially the expectation should have been, if market stays above these areas, which is this, then I'll have a long side bias, which happened. We got a pullback from here to here. If market is breaking below these areas, then we'll have a short side bias to cover this range. Okay, which is what has happened. It once it broke below, it covered in SGFI. We do not know what pace it will cover. That pace and other information can be determined by something like the cluster charts can be determined, I'm saying, but not certainly, but definitely can be determined. And then based on that, you can use that information to form a view. Okay. Now, what happened here as well? Now, if you see yesterday, after it went here, it we had this kind of a range. It had this kind of a range, right? Okay. Was there a clue that market could be stopping somewhere, or could have been pausing somewhere? There are a couple of areas, I think, in the chat or anything that we identified. One, if you see, the lows marked was this VPOC of this day. Okay. This was the day which was a potential support, and the lows marked was around the VPOC of the day. It is very simple way of understanding. So last time there's a lot of volume that aggregated at this level, and once market visit this level, you expect some sort of a pause here and some sort of a reversal. With you that you don't know is a significant reversal or not, but you expect that sort of a movement. Okay. The next VPOC below that was around 800, 850. I think you're expecting that today. We just got somewhere higher than that, and eventually markets sort of held up. It could be expiry, it could be other reason, but markets eventually held up those areas. Okay. And if you see today, if you see what has happened again today with respect to this entire move, okay, yesterday's volume was concentrated around this range, right? Yesterday's volume was concentrated around this range. Okay, so today your expectation should have been that, okay, until we are into this range, you expect a bit of a pullback. If you're on the lower side of this range, you expect market to test lower. Only market can go higher if we are expected, we are able to take out the higher side of these ranges. Okay, so if you see, there were multiple attempts by the market on the VPOC of yesterday, which was around this level, and every time it tested that VPOC, okay, we did some sort of a pause and a rotation on the downside. Okay, this and this. Okay, at the same time we were not able to crack below, so there was largely no volume interest below yesterday's low. That again shows that market kind of have paused and has done a bit of a balance here. Okay, now based on that, what you would want to do tomorrow is see that you have a very nice small balance range in the market, which is this range. Okay, I want to see whether market can hold outside this balance, then we'll look back to attempt again this cumulative epoch. Okay, or if market can pause into this balance, then we'll look back to attempt on the lower side targets of 800, 850. Okay, that's how you simply try to plan that level. Okay, now why low volume nodes are important? That's a very good question. Okay, just reading that, so that's a very good question. Why do low volume node at all form? Okay, low volume is basically low volume, and why do they form? That's because at that level or that price point, sellers or buyers are not willing to interact. Okay, so essentially nobody is interested to trade at that price point. So for example, if you see, this entire fall yesterday was a low volume node. Why did this low volume node happen? Because sellers started selling hard, and there was no buyers to support this market at these levels. So essentially, seller has a simple one-way run, whether it's a stop run, whether it's a lack of buying interest or anything. But on the same move day before yesterday, whenever market was approaching these levels, there was a buying interest, and hence market kept on pausing and pulling back, and hence you have a high volume node here. You had a volume node here. It was not a dead node where nothing was happening. But on the same thing yesterday, we saw lack of buying interest when markets visited this level and sellers quickly pushed back. So what means, buyers were present yesterday at these levels, which is 20 to 150, 150 Nifty. Buyers today yesterday was completely absent at this level. Okay, so that means what? Until market is able to hold into this region, okay, any pullback, there is no buying interest here. There is no buying interest all these levels. So any pullback to these levels will be met with a resistance and will be met with a potential move down. Okay, that is the way you try to interpret low volume node and high volume node. Remember, high volume nodes are magnets where prices will visit and their target areas. Low volume nodes are kind of resistance areas. Okay, and where you expect prices either to sort of test and retrace or completely blast through that region without much sort of a retracement. Okay, now as I said, now let us look into the footprint charts, okay, to understand and interpret clues about this happening. Okay, before I go there, I also want you, as I said, I also want you to consider something called as, if you're really getting started with your order flow stuff. Okay, delta bars is a great way to start doing it. Okay, delta bars, which is basically cumulative delta. You put the delta bars here, you go to the settings, okay, and then you just switch on the cumulative delta thing on. Okay, which basically what it immediately gives you a view of cumulative market interest at a certain level. So day wise, it will start plotting the delta for each day. Okay, so look at what has happened at each subsequent days. Okay, so, and you'll start interpreting every day very nicely. So yesterday was a complete price going down. Okay, so, and then deltas kept on pushing down. That essentially shows that the buying interest was low even on the pullback. So if you see, in this case, the pullback was significant in terms of price, but the pullback in terms of delta was very insignificant. And again, it came all the way down. Okay, so they give a very nice visual clue of trying to interpret the day action with respect to the delta. Okay, if you can see the charts, I've just enlarged it. Okay, I'll just again try to explain this example. If you see here, prices did pull back. Okay, but what was the delta pullback? It was very minuscule compared to the price pullback. Price pulled back to this level, but at this level, delta was here. Delta never pulled back to this level. Okay, some guys are saying that they are not able to see the screen. Please confirm if you can see the screen. Okay, great. Okay, I think then please check your individual settings once, and maybe Angad will also upload this. Okay, so it will be available on the YouTube site as well. Okay. So this gave a very good clue that the pullback was not met with a very strong volume interest and delta interest, and hence it again paused at a certain level. Where did it pause? Just short of the high volume node, low volume node at this level, and then retraced back. Okay. So that was a sign yesterday. Today, if you look today, if you come back today, okay, today was a great sign of a lot of two-way action, because if you see, I think I wrote in the group somewhere as well. So yeah, just to think everybody, there's a 3 dots Google Meet. Please. Please sort of use that and move that to spotlight. Okay. Now today, I wrote somewhere in the group that the cumulative delta is very flat, which is essentially, till this point it was very flat. Then it came down, pulled back. So that puts that no one side was really interested to pull the market significantly in one side, and as a result of that, it ended up becoming a very rotational market today. Okay. So and this is again a good cumulative delta clue. And look at day before yesterday again. Okay, day before yesterday, significant buying interest, very significant buying interest. But if you see, the price move was not that significant. Okay, and again, it is a hindsight thing. But if you look at it, and what has happened is, every time, so there are two things. Every time there was a pullback, there was a long opportunity, and eventually market closed at the day's highs. Okay, and second thing is, despite this significant buying, since market was not able to take off the highs of the day before yesterday, which also showed that There's a lot of limit selling happening at these levels. So all these buyers are getting dragged into a limit sell book, and the reaction we saw it yesterday of that. Okay, the reaction we saw it yesterday. Okay, so this is again a good clue of trying to interpret the cumulative delta of how it is reacting. So see. So my one simple advice is if you are really if you're really getting started with order flow analysis, and footprint chart is looking at is seeming like too much data for you to understand, interpret. Okay, what I can tell you is, guys, start with cumulative delta, start using it, and it will make a lot of sense early on. Then, of course, you adapt footprint for sure. Okay. So again, a clue here. Okay, when market came back here on the day before, till this point, I think delta was minuscule. But once you had this buying delta, okay, once you had this buying delta at this level, you are certain that there's a lot of buyers trying to pull that. So that level never broke. Okay, and then you eventually had a higher low, and market kept on pushing higher. So try to use cumulative delta again, to sort of enhance the understanding of your markets. Okay. Now we'll also go to a bit of a footprint charts. Okay, and then I think after that we'll take some questions. So today's order flow, I think activity was not really significant at any point to take note, but yesterday's was a great one actually. So we'll just quickly look into that fall, that happened yesterday. I think 200. So one more thing you can do for a visual thing, and many times we are not interested to read the information quickly. One more thing we can just do is quickly put the delta bars on top. Of course, in this case, I don't want a cumulative view, so I'll just switch off the cumulative view. So that gives you a good idea of, let's say, what is the okay, what is the delta at each level. Okay. Or I can put the bar stats also, cumulative delta, that's fine. I just put the bar stats information here, which is basically I'm largely looking at 2 or 3 stats only. I'm looking at the volume, I'm looking at the delta, okay, and I'm looking at the cumulative delta, and sometimes a percentage change in volume. Okay, so now if you look at this chart, a clear change of trend or anything that you might call, okay, is signified by a couple of things. Okay, once you had this large selling delta candle, if you see so many quantity got sold here, okay, the volume for this candle was almost, if you see compared to the previous candles, it was almost 9 times higher. The delta shift was massive till this point of time. Okay, your cumulative delta was hardly minus 41K, minus 486 quantities. It immediately became 360, 3,600 quantities. So, and if you see, once this imbalance happened, it got plotted at an imbalance layer. Next candle pullback failed here. Okay, next candle pullback failed here below this imbalance, and then prices continue to drift lower. Okay, so essentially, once you have some sort of candle where there is a lot of delta that get traded, and there is the push on that candle is not being able to take out the imbalance layer, it's a good sign that market is finding support and resistance there. Okay, and then market is cooling down. Okay, that's a good question. Could you explain what is in the candle? Okay, in the candle, if you can see, sorry, if you can see clearly, I'll just zoom it a bit more for everybody to see. Okay, what we have is the bid on the left side, okay, which is basically the seller delta, into ask, okay, which is the buyer delta. So traded at the bid, traded at the ask, okay, and the net difference of this is a delta in this on the right side, okay. So essentially what we have is the seller, buyer, and the difference between seller and buyer. So if you see, this is 840 quantity and this is 109, the difference is basically minus 731, okay. So minus 731 is the difference of this node. So each node, as I'm saying, is a, let's say, 3-point node for me. Each node I had this delta basically that got plotted, okay. Okay, now there's another information, if you see, of trying to preempt this move. Okay, now next question is, can I preempt this move? This was the point where this move potentially could have been preempted. Large sort of a volume shift and delta shift. Okay, basically we had good volumes here, good deltas here, but in this case delta shifted massively from minus 800, it went to minus 200. So basically there was 600 lots of buying which has happened at this candle, okay. And what has happened is, despite that, prices in subsequent candle failed to even go past these levels. Okay, if you see, none of the highs took out these levels. Okay, so it is a good sign that this entire buying was basically absorbed by a limit seller here, limit seller. Okay, and once it is not, if prices would have been traded over, then I would have considered a long buy to continue to move higher, right? So this was a clue, if not a clue to short, it's a good clue for you to understand. Let me reduce my longs if I'm long, or wait for shorts to happen. Okay, okay, and similarly, uh, this is how you interpret this information. I don't know if okay, delta info. See, delta info, I think what a lot of you are asking about how to do this template. I think it's very simple thing. I'll quickly show you how to do this template. If you go to your footprint chart settings, okay, which is here, what I've just done is I've done a double, a column selected as double. On the left side, I selected bid and ask. I want the bid and ask in one place. Okay. And on the right side, I've selected delta. That's all. So you do this, but my yeah, this and the other one, as I said, my favorite one is, I think, probably this or the simple cluster chart, which is bid cross ask. You can do both, whichever you want. Okay. Whichever you want, we can do both. Okay. And what else, guys? What else? I think also this is a good sign of the reverse thing happening. Okay, if you see, and this was kind of market stopping somewhere and pulling back. You see delta till this point. I was always looking at cumulative delta and the reactions to it. Okay, so the delta till this point was what? Minus 348 quantity. Okay, and then it become minus 200. 2,200 quantity is a significant change in the delta. Okay, and then in this one, again, another 500 quantity of shorts getting added. So delta was constantly sort of pushing hard on the downside, but prices stopped here, right? Prices was getting stopped here. So from a cumulative delta of 530 plus, we went to minus 3,000 almost. Okay, so basically a minus 3,500 cumulative delta change, right? But what we did on the price side is very less. The price side was very less, and eventually price stopped there, and then price sort of pulled back from those levels. Okay. So this is a good example where price would have paused, and then the long, action happened for a pullback scalp. Okay. I think, yeah, we've done some time here now. I'll take some questions if at all, and then, or maybe I'll try to read through the chat and answer the questions as much as possible. And you can post your questions in the chat, and let's take some of the questions which I think is relevant. How to go long and vice versa. So Ravi, I explained this case where vice versa, where on the downside delta paused, okay, and then market pulled back. As I said, the same information you could have inferred through the volume, cumulative delta charts, if you like it, much easier to interpret. Yeah. See this on the cumulative delta chart, what was happening is cumulative delta significantly went down, but prices was holding up in this range. and eventually that pullback happened, right? So much easier to interpret that way. Okay, and yeah, and then the next question is in a bid, it is bid minus ask at a particular block. So So bid ask, it's a market buyer, market seller. So market buyers get, squared off against the market sellers. Please note that. Okay. So I think I've again and again said that. So, whatever is on the bid left side is market sellers. They are getting squared off against the limit buyers. Okay. Whatever in the right side is market buyers getting squared off against the limit sellers. Okay. In case of if you see any absorption is happening in the uptrend, then at what point should you make a trade for downside play, and at what should be the so good question on what point should we make a downside play. I think it's not just looking at absorption and other things, but it is also, please try to understand, it is also in context with where price is. Okay, just don't try to use it as a standalone indicators. Okay, so for example, look at this candle, look at this particular candle where a lot of absorption happened, right? A lot of absorption happened. And where did this candle sort of trade actually? This was right at the VPOC of yesterday, okay? This, okay. So this is a good price to say that, okay, I have a reference here. I have a reference here where market, kind of traded a lot, did a bit of two-way action, both sides of it. So there's a good confluence. I use this reference to say, okay, market until we are above the VPOC of yesterday, then it can pull to this low volume. Else, then I'm looking for some rotation to the volume node of this day, which eventually rotated to right to the actually it rotated to the exactly around the value area low of yesterday, where again it paused and pulled back. Okay. So use it along with a price reference. It could be pivot points. It could be whatever, I prefer volume profile or market profile, but use it along with a price reference. Okay. So yes, on doubt three, the larger the volume, okay, in terms of absorption and everything, basically, and the larger the volume, I think the more concrete the information is. At the end of the day, it is all probability information that you're putting together. Whether I have two or three factors lining up, my probability improves. Okay, if I have less than two, three factors lining up, my probability improves. So at the end of the day, it is all probabilistic information that you're putting together to sort of make that guess of whether this will work or this will not work. Okay, so please do understand, the larger the volume, the more concrete the information is. Nitish, thank you so much. Can okay, COT, I think COT I have explained a lot in the videos, VN. Okay, have a look at that, and the next session we can specifically talk about COT. It's a large topic on itself. I personally don't use much of COT, but have a look at the video once, please. Okay. Okay. Arish, there's a question from my Telegram channel which says Bank Nifty future settlement and so settlement price is basically the average closing price. So please note, okay, every day market closes. Okay, if you see the LTP is what we have at the 3:30 p.m. So today's LTP is 985. Okay, but if you go and look into NSE website, you'll have a very different future price, which is basically the average of, I think, the last 30 minutes of candle. Okay, that is the settlement price. Okay, so if you look at the Nifty futures information on their site, okay, the settlement price on Nifty spot or the futures would be little lower, especially if there's a one-sided move that happens. Okay, it is little lower. So yesterday, what we said is Bank Nifty futures settlement price at 45,850, nearly 100-point discount to spot. Essentially, the idea was that yesterday, because of the late move down in Bank Nifty, I think Bank Nifty, we had this late move down. If you see yesterday, last half an hour, 45 minutes. So the idea was that a lot of late shorting happened at that level, and so the settlement is at a much sort of a lower price, and it's at a no discount to the spot prices. Generally, futures trade premium to the spot. So when it's a discount, means there are too many shorts which are there in the system. So the idea was today, if it opens up, there will be some sort of pullback before a short happens, essentially. Okay. Okay. Okay, Shravan, I've explained the setting. Order flow setting I've shared already. Written I've explained. Could you share for price? Imbalance, Arvind, I've explained the example. Okay. Uh, I think largely you've covered most of the questions. Okay, stock future. I think I prefer the future charts. Okay, try to use the future charts if there's a large cap. If the small cap or a mid cap, the futures trading is very low, then look at the spot charts. Okay, that is better. Okay. Okay, Bruce. Okay, I'll take one by one. Just a second. Uh, Market profile and volume profile, Bruce. In the last session, I had explained that, but I'll quickly repeat that. Market profile, volume profile, first of all, is basically the volume plotted over time. Okay, over the price. Okay, what you generally so far in a traditional candlestick, what you've seen uh, is essentially the volume of each candle, right? So here the volume is divided by time. Each candle, if it's a 5-minute candle, it is divided by time. So now once I plot a volume which is plotted on the price axis, so I don't care about time. I'm saying that okay, how much volume is traded at each price in each day, then I get the volume profile of that range. Now 70% of that range is called as the value area, which is colored in a different color code. Outside that is basically the low volume or the value area high, value area low. The most traded volume is generally the VPOP. Okay. Now when we take this off, we have a very similar profile which is called as the market profile. Okay, not much difference. The only difference in market profile versus volume profile is market profile plots the volume, the profile over time. So it looks at how much time it has spent in the market versus how much volume it has spent in the market. So market profile is a good way to look at information when there are multiple exchanges, multiple venues, etc., like crypto, FX, and other things. Okay, volume profile is very good when we are looking at one single exchange like Nifty futures, other things. Okay, so both are good. Larger term picture, maybe use market profile. Small short term picture, use probably volume profile better. Okay. Nishan 68, 70% doesn't matter, hardly difference. Basically, the right number is 68, Nishan. Okay, that's the one standard deviation number, then based on which the volumes of profile are formed. But 70 is the kind of common accepted figure, as a reference, basically simpler one. Okay. I think trading for me is on future charts, and then I trade the options, but I analyze data on the futures charts because it's very difficult to do on the option charts because there are too many option strikes that are getting traded. So different strikes will show different sort of information, but in future there's just one future, which is largely the current month future that gets traded most. Okay. 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 Can you explain the DOM and trade book if I know? Okay. I'll quickly talk about the DOM and the trade book. DOM is on the right side. So DOM basically is essentially the depth of the market, the order book that you see. So challenge with trading DOM with Indian markets, Chetu, is that we have the top 5 orders, which is basically top 5 in a certain tick, but the larger orders are not there. When the full book is not there, which is not available. So typically DOM trading is very difficult, okay, from an Indian context, but generally this ideas are the same. If there are large orders lying in the DOM, they act as price magnets, and price will try to test those orders, fill those orders once. Okay, that is the general principle of DOM trading. Okay, you will all, and also when market is trying to break out or break into a level, you will see the DOM. So DOM as a feature is available in Go charting, but it is it is not available for much. It is features, but if you look at crypto and other markets, you can actually see the active DOM basically. Okay, so if you see the DOM book in there, it is there. Okay. So the entire depth of market information can be available. Okay, trade book is basically what is getting traded. So I have a good video on how to use the trade book. Generally, if there are large trades happening and market is trying to break out and the trades are favoring that direction, there is an intensity of bias there, for example. Okay, what you do is on a trade book, you can also use a filter. So let's say I only want to see orders more than 10,000, I can just use a filter and then I'll put it on the trade book. Then only the high volume orders can show. That's how you refine your trade book, because otherwise trade book is very fast moving information. You don't want to sort of look at everything. You just want to enable one trade book setting, and then try to sort of use this information. Okay, so 1,500 Nifty Bank Nifty, I'm using thousands, so sometimes on the trade book to see what is happening. Okay. Okay, charts. Most of the time, you see the charts nonsense. I do not understand the question, Maru. So, so what is the difference? What you are talking about? Okay, maybe Tom is done. You can do it, Tony, and Tanma on the options charts, but recommendation is analyze the futures chart and then trade the option charts. Okay. So we and today's chart is a little tricky to analyze delta, cumulative delta, because today is generally the rollover month. Okay, rollover data. So in rollovers, a lot of times buying in this and selling in the next happens, or selling in this and the buying in the next happens. So you have to be a bit careful. So I think I've shared in the past a lot of examples around how to bit more touchy about interpreting delta values in rollover days. So I think those are the only around rollovers last 1 or 2 days of the month you have this issue. Otherwise, I think yeah, be a bit touchy on seeing large numbers. Sometimes a large buying happens here and the large selling immediately happens in the other one contract. So rollovers you have to be a bit careful. I think Ari's my top three is I always look at my setups are very simple. Actually, I have shared in most of the places. I'm looking at a volume profile chart, and then I'm immediately looking at the order flow charts. Pretty much that. Okay, so I'm looking at volume profile. I'm focusing on the day profile, and the so my immediate reference is to build a plan based on the previous day, and then I use the cumulative profile and the larger VPOX to understand the references. Once we have this, I'm then quickly shifting to the order flow charts to sort of see, what I want to trade and where do I want to see the action basically. Okay, if market is correlating to my view or not. We would use VWAP sometimes as well. VWAPs to just have a general idea of where we are on top of the VWAP, but VWAP preferably use after 10:30, 11, because then a significant time has been spent to understand where the volumes are structured. Okay. Nowadays. What about some so erratic movements? Yes. So if you see generally order flow around, you cannot really predict the erratic movement, but you can really figure out why certain things are happening, or if the buyers or sellers have got trapped at a certain level. Okay, that way you will get to understand whether an erratic movement can be picked or not. Okay, so for example, if you look at this today, there was this and then the sudden fall, right? It's very difficult to pick out how long or how large it can be. But generally, one thing I could immediately infer with this is once you had this candle with such a large delta change, till this point, deltas was about 85, 45, 500, and then you have a 1300 quantity getting traded on this one single candle. Okay, and so what is your expectation? Your expectation is that market buyers have come in, now market should go from here. Now, if that doesn't happen, means what these all buyers who traded at this level are trapped. So once we have a close below this, which happened at this candle, okay, or move below this, then these buyers would have a panic and could lead to further downside action. How much we do not know, at what pace we do not know, but you can at least figure out that this could lead to a downfall, market rotation essentially. Okay. Order flow settings and chart, guys, I've shared many times in the templates, in my trading room, Telegram chat room. Okay, this Telegram community which I run, try to join it if you can. It's free, and there are a lot of other good traders also who are contributing there. So you'll really enjoy it actually. Okay, and we're sharing daily market analysis there. So see if you can join it. There are a lot of guys I think from that community here who would vet about how that it's a good trading community that we're running actually. Okay. Okay. I think we are at the top of the hour, 1 hour, Angad. I think we can close maybe. We'll do a subsequent session again, guys, next week or probably after that. Please share your feedback and do share your love and interest. That's all we can say. Any go chatting related support, please sort of reach out to Angad and Durgesh. Okay, and of course, you can always ping me in that community as well. Okay. Yeah, I'm good. Maybe you can close the session today.
Thank you, guys. Thank you, Santosh sir. Um, if you guys have any questions, kindly leave them in the Telegram channel. I'm going to open the Telegram channel. Go chatting one. Please do join sir's YouTube channel, Telegram channel. Sir also has a course. You can get more information about it from his channel. Go ask him questions about it. Mm, yeah, that's about it. Have a good evening, guys. Thank you for joining. Please leave your feedback on sir's Twitter handle if you can. Take the extra effort. He's doing this at this late hour. I think I'll leave a link to Twitter, and yeah, leave your feedback on Twitter. Okay. Let me just check. Yeah, this is the link. The Twitter link is posted. Um, Recording will be posted soon, as soon as I get it from Google. Thank you so much. Have a nice day, guys.
Thank you. Thank you so much, everybody.